Major funding for Market to Market is provided by Deere & Company on behalf of John Deere dealers and by this and other public television stations. Additional funding is provided by Friends of Iowa Public Television and the Central Educational Network.
On the East Coast, farmers are tabbing up the toll. At the checkout counter, sticker shock from rising milk prices. And on the shelf, the success story behind a hot crop. Those stories and more next.
This is the Friday, September 13 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mark Pearson. The nation's economy continues on a steady course. Inflation does not appear to be much of a problem. Excluding volatile food and energy costs, prices at the wholesale level actually declined. Consumer inflation rose a modest 0.1% last month on a dinky 0.2% rise in retail sales. According to a report compiled by the 12 Federal Reserve banks, inflation is not evident, even as the unemployment rate has fallen to near a shade over 5%. That news has been greeted enthusiastically by a normally skeptical Wall Street. Stock prices broke through historical highs on Friday. While the prospect of a Fed interest rate hike remains, the investment community is heartened by trends of continued growth and low inflation. In rural America, the economic fundamentals remain constant and visible. The nation's spring wheat harvest is moving rapidly toward a conclusion. At the beginning of the week, 83% had been completed. The corn harvest is underway in the South and working its way northward into the major corn-producing states. 62% of the crop is rated as good or excellent, as is 55% of the soybean crop. 57% of the nation's cotton crop is rated good or excellent. Prices on futures exchanges slumped a bit in response to government projections of a better-than-expected U.S. harvest and an improving outlook for Southern Hemisphere crops that will be harvested next spring. Government officials continue to increase their scrutiny of large-scale livestock operations. Officials are concerned about not only the environmental effect of such enterprises, but the conduct of the operations. In the East, the federal government has launched litigation against one of the industry's biggest players. And also in the East, citizens, industry, and government officials have launched an ambitious initiative to regulate and guide one of the state's most important agri-industries. And the impact of high grain prices is beginning to trickle through agriculture to the checkout line. High feed costs and a reduction in dairy herd size have resulted in higher farm gate prices for bulk milk. The effect has been an increase in dairy prices at the consumer end. This week, milk has either brushed or gone over the $3 per gallon level at supermarkets across the country. Even with higher feed prices, producers are finding the payoff more than offsets the cost. The USDA predicts a flat milk production rate for next year, with demand continuing to rise. After receiving approval from both the Maine Supreme Court and Maine legislature, Governor Angus King's measure, tightening clear-cutting guidelines, will be added to the ballot in November. The new proposal joins a Green Party initiative calling for a statewide ban on clear-cutting. The King proposal offers voters another choice: limit clear-cutting, create a forest preserve, and monitor logging in the state. Governor King hopes his proposition will soften the blow to an already shaky logging industry. Voters will now have three choices: Measure 2A, the Green Party's ban on clear-cutting; Measure 2B, Governor King's modified clear-cutting bill; and Measure 2C, a vote against both initiatives. A recently released study by conservation groups estimates only 6% of the world's 13 million square miles of forests are protected. The pretrial work has begun in the $3.6 million lawsuit against egg mogul Arthur Jack DeCoster. DeCoster is charged with violating various OSHA regulations at his egg farm in Turner, Maine.
I feel like we made mistakes on safety as far as accidents went. As far as like a person having a small accident, you have a lot of little stuff.
Since the story broke, supermarkets in the Northeast have refused to buy his eggs until conditions change. DeCoster publicly apologized for the problems at the Turner facility and promised to make corrections. U.S. Labor Department officials say they are pushing ahead with the case to hold DeCoster to his word. While DeCoster may be expressing contrition back home, he has released the lawyers in the Midwest, declaring DeCoster had exhibited a pattern of conduct that separated him from mainstream hog producers. Iowa Governor Terry Branstad last spring ordered the state's Department of Natural Resources to place a hold on new permits for DeCoster, preventing expansion of any of the company's hog operations in the state. This week, the Maine businessman subpoenaed the governor and two of his aides as part of a legal challenge to the governor's authority to regulate expansion. Stay tuned.
Vacuums up not only the dog hair, but the whole dog. It's the latest in rodent control technology, the Prairie Dog Vacuum. A wide-mouthed plastic hose is shoved into a prairie dog hole with no hope the dog can escape. Hooked to a truck once used to clean out sewer lines, the hose sucks up the dogs at 300 miles an hour. The critters are hurtled like cannonballs from the hose into a foam-cushioned truck. The prairie dogs that survived the ride have been sold as pets, as bait to capture endangered species, or are relocated to a sanctuary southeast of Denver.
In the Midwest, corn and soybean producers are growing concerned about the prospect of an early frost. That's not unusual. In fact, the weather is the primary staple of conversation in rural America. Typically, the crop will be lost to weather several times from spring planting through harvest. Occasionally, the weather will claim big portions of the yield. But drought, flood, or frost are no match for the storm that hurled through the southeast coast last week. Estimates of the enormity of the loss are still uncertain, but it is clear the storm could not have hit at a worse time. 1 week after Hurricane Fran blew through several eastern states, farmers are beginning to tally the losses. In North Carolina, where total storm damages are expected to exceed $1 billion, a number of agricultural commodities have been devastated. For tobacco growers, already victimized by declining world market share, intense regulatory scrutiny, and election year politics, Fran couldn't have come at a worse time. 70 to 125 mile-per-hour winds ravaged much of what was in the fields. Tobacco of the highest quality, the most valuable top leaves. But the tobacco woes don't end there. The biggest problem may be for flu-cured tobacco already harvested. In order to cure properly, tobacco in drying barns need steadily increasing temperatures from 90 to 165 degrees over an 8-day period. With hundreds of thousands of residents still without power, much of the tobacco is at risk of rotting. In some stages, tobacco can only stand 6 hours without power. The North Carolina Tobacco Growers Association says farmers will do well to produce 80% of that state's quota and estimate a shortage of 70 million pounds. While tobacco represents the lion's share of North Carolina's $3.2 billion agricultural industry, the other crops didn't fare much better. Corn, soybeans, and cotton were already bruised when Hurricane Bertha came through in July. Now, on the heels of Hurricane Fran, standing water can be found in many soybean fields, and much of the corn crop has been blown over. North Carolina produced nearly $400 million worth of corn and beans last year, but there's little optimism for this year's crops. There is also concern about the cotton crop, which is nearing maturity. With bolls beginning to open, the combination of torrential rains and high winds caused substantial damages. Last year, North Carolina produced more than $300 million worth of cotton.
It could be an eye-opening opportunity for ostrich producers. An Oklahoma ostrich producer will provide the tissue for a research project aimed at determining whether ostrich corneas can be transplanted into humans. A New York infirmary will handle tissue typing, and if surgical experiments performed in Kentucky prove successful, ostrich corneal transplants could be a reality within 6 months. The Oklahoma Department of Agriculture hopes ostrich eye tissue can become a bonus byproduct for the birds now being slaughtered for meat and leather.
Most rural Americans on and off the farm want an economy that insulates them from some of the volatility of commodity market swings. The answer lies in enterprises that employ rural Americans to process and market what is grown locally. In some instances, those enterprises have been spawned by farmers. Rural cooperatives are springing up all over. In South Dakota, state lawmakers are pitching the idea of a 1-year, 1-cent state sales tax to help develop agricultural enterprises. The temporary tax would generate about $95 million that would be used for low-interest loans to farmer-owned cooperatives. But oftentimes successful agri-ventures are the products of urban entrepreneurs who start at the consumer plate and work their way back to the field, generating profit along the way. Last spring, producer John Nichols found one such enterprise that started out hot and is getting hotter.
Legend has it that the Datil pepper, a relative of the habanero, came to St. Augustine, Florida from Spain in the 1700s. In all probability, it made its way to America via the trade routes through Central and South America during the 18th and 19th centuries. Even though the Datil pepper has been around the St. Augustine area for hundreds of years, it has remained largely a secret to the rest of the world, at least until recently.
I started Datil Do It in my restaurant, Barnacle Bill's. I'm primarily a restaurateur who kind of backed into the hot sauce business. But we started Barnacle Bill's in 1982, and we specialize in Florida seafood. I was making a Datil pepper sauce to serve on the tables with the fried shrimp and oysters and stuff, and didn't have a label on it, didn't have a name on it, and almost daily 4 or 5 bottles would disappear from the table. So then I got to thinking, I said, well, maybe if they'll steal it, if they're given the opportunity, they'd buy it.
39-year-old Chris Way of St. Augustine grew up on fiery food set ablaze by the Datil pepper. Today he's CEO of Datil Do It, and his mission is to share the pepper with the world.
The beautiful thing about hot sauces and hot peppers, and it creates a following of people that are fanatical. So you've got loyal customers forever. So I don't know whether or not there's some characteristics of the pepper that are addicting, but I certainly hope so.
According to Chili Pepper magazine, which proudly proclaims itself as the world authority on anything hot and spicy, the sauce and salsa business has combusted into a $2 billion a year business in America. Ruth Ann Causey assists Way in the marketing of Datil Do It.
Hi, can you tell me where your corporate buying office is located? We started with probably one ad in the Chili Pepper magazine, and from that we've got a mailing list of about 30,000 people. And from that we send out catalogs and do different mail outs. But it's pretty much the only advertising that we've done.
Datil Do It began with just one product, Datil Do It hot sauce. Since then, Way has added other Datil derivatives like Hellish Relish, Menorcan Mustard, and Devil Drops. Each of the products carries the distinctive Datil Gator logo. But marketing Datil Do It's products hasn't exactly been an overnight success story. Causey says she's heard a number of excuses why buyers are unwilling to put Datil Do It products on their shelves.
Take the product, for example, one concern I've had recently in some of the southern chains is the gator on the logo, the gator logo on the labels, that it looks too much like the devil, and that within the Bible Belt that might be a concern with the customers and different things like that.
Beelzebub notwithstanding, the company has made progress. Datil Do It products are sold in all 50 states and abroad. Nevertheless, Way claims distribution remains as the biggest challenge facing the company.
It's pretty difficult for a small company without a lot of cash to get into the grocery stores now because they have slotting fees and there's just a tremendous amount of competition for the shelf space. So really it doesn't, in the beginning, I'm sad to say that having a great product is so minor going in. But You know, it can go from my warehouse to the grocery stores and go through, you know, 10 or 15 buyers and brokers and whatever, and not have one person stick their finger in and taste it.
It's good. Now, if you want to try something a little hotter?
A major breakthrough occurred last year when Datil Do It successfully placed 50,000 gift boxes in several national department store chains.
Fortunately, with those accounts last year, we went from, you know, like 550,000 in sales and to just a little over $1 million. I'm hoping that this year we can do $2 million in sales, which is still a very tiny company. I mean, to me, it's a milestone, but, you know, and it's still pretty small.
With anticipated gross sales of $2 million, Way needs to have a large supply of datil pepper. Realizing the local datil supply would never satisfy his anticipated demands, Way began the Datil Do It corporate farm.
And this will be our 3rd year on our farm here. We grow the plants up on platforms about 4 feet off the ground. And the main reason that we did that, as far as I'm concerned, is I was afraid I was going to be the one picking them. And so this keeps me from having to bend over, which, believe me, makes a tremendous difference. And on our system, our plants produce about double, or probably over double, what they would produce conventionally in the ground. We had 1,200 plants and we got 14,000 pounds in our first year, which was phenomenal.
Way readily admits he's not a farmer. His expertise lies in product development and marketing. In addition to department stores, the company sells its products in gourmet shops, major grocery chains, mail order catalog, the internet, and at 2 retail shops in St. Augustine. While Way claims Datil Do It has a modest advertising budget, he does allow himself one marketing luxury.
I bought a Harley a few years ago, and I wanted to customize it and do a custom paint job, and so it was just natural that I did the Datil Do It Harley. And I take it to shows with me, and you know what's really funny though, sometimes I'll do shows and little carnivals or, you know, barbecue contests, and I'll have the Harley Davidson there, and you know, everybody will be standing around the Harley Davidson. I can't get them to even look at my stuff. So I don't know if it works for me or not, but yeah, it's really a good little marketing tool for me, and plus, you know, I get to ride it.
Next, the Market to Market Report.
The grain markets took it on the chin this week as the trade absorbed government reports indicating improved conditions for the 96 crop. For the week, wheat prices were down more than 17 cents in Chicago. Corn prices closed fractionally lower on the nearby to more than 11 cents lower for December. Soybeans were stronger with the nearby contract more than 4 cents higher. Soybean meal turned in a $5.10 per ton gain. December cotton gained more than 1.5 points, and in livestock, fed cattle futures finished the week $1.10 higher. Feeder cattle gained 15 cents, while hog futures were up $1.80. In the financials, COMEX gold closed $3.10 lower per ounce. The German mark was down nearly 1 point against the dollar, and the CRB index finished the week at 245.75, a gain of nearly 2 points. Here now to lend us their insight are 2 of our regular market analysts, Tom Fitzenmeyer and Doug Jackson. Gentlemen, welcome back. Right. Big move down in the wheat market this week, Doug. What's your feeling on making wheat sales these days?
Well, Mark, we're seeing the response to the government supply-demand report where they failed to change the feed estimate number, which many think could be substantially bigger than what's forecast. But they cut exports sharply and they pushed the forecast for the crop size higher. Many people think it'll be higher yet. And most importantly, they pushed the carryout estimate above 500 million bushels. So, Mark, what we're seeing in this whole grain and feed complex, whether we're talking about corn, milo, oats, barley, or wheat, is we're seeing stocks rebuilding around the world. We're seeing huge increases in world production, big crops in Canada, big crops in Argentina on the way, big crops in Europe. All of this stuff's looking for a home, and we're going to hit a brick wall in terms of demand here. And the wheat market, as well as the other feed grain markets, are just showing us in the broad scope rolling over effect, and we're looking for lower prices in all these areas. Now, just how much lower? We still think there's some significant changes yet to be seen in this wheat balance table. We actually have a shortage of soft red wheat in the United States, and that may have some impact on the Chicago futures contract. But in the larger sense, world wheat prices are clearly headed lower. We're getting good moisture for planting on the winter wheat crop that's starting to be planted. We think there's some upward revisions yet in the spring wheat crop. And we're going to see major exporter competition. So we're seeing once again the roller coaster effect here on grain prices, high prices responding with bigger production around the world, rebuilding inventories. And while we're not working back into a world food situation that is anything like the oversupply situation of 5 or 10 years ago, we're moving into a more comfortable type of a zone, a non-rationing kind of a situation. And that incremental value of that extra bushel is a very low price. So we think that we could see another 20 or 25 cents down on wheat prices here, not immediately, but over a period of time. The next major thing in wheat will be the September 30 stocks report to see what this wheat feeding was in the first quarter. That'll start to put some footing under this wheat market. We're more concerned about the substantial additional downside in corn from these prices even today.
Okay, let's talk about that, Tom. Corn market, as you look at it, based on what Doug's saying, he's rather negative on wheat. What about corn? What's your feeling?
Well, just to carry through with what Doug was saying, I mean, we had $5.50 corn because we had $2 corn before that. We built a strong demand base. The inverse is going to be true here. Number one, you've got everybody all over the world has had all kinds of incentive to produce feed grains. You've got demand that's going to be a demand situation that's going to be totally changed because we had the high price corn and wheat. And so I think we're gradually going to work lower. Now it may not go immediately, and we're going to bounce around, and we're going to probably put weather back into the market before the month's over, but we're gradually going to work away, and you need to be a seller on rallies rather than a buyer on dips, which you should have been over the last year probably.
Okay, so you'd be for getting this 96 crop marketed about 97.
Well, certainly everybody and their brother thinks they're going to store this year's crop in order to catch that spring rally that we had last year, and that, generally speaking, is probably the one thing that will not happen. So I guess I would be encouraging people to be making sales here at harvest simply because there's still going to be a fairly strong basis, I believe.
Doug, what's your call on making corn sales?
We want to do that. If corn could trade in a vacuum, our price model suggests, Mark, that by next spring, futures could be as low as $2.75, which is another 40 or 50 cents down from here. Now, that's hard to imagine, but we're going to be moving. It's very possible that even the casual observer will start to understand the possibility exists that corn carryout this coming year could be as large as 1 billion bushels. That's well above what's currently forecast by the government. Our firm estimated a corn production estimate here for 2 months in a row now, over 9 billion. We continue to feel that's the kind of a crop size. We're actually getting field reports of even better and surprising yields. With a 9 billion crop, a lot smaller exports, and even an okay feed demand, carryout could be 1 billion bushels, setting the stage for lower prices. Now, I say in a vacuum because we do think the soybean market will exert some cross-influence and maybe keep corn from going as low as it might have otherwise in a non-bullish bean situation. But the general feed grain situation is bearish from these prices. We'd make sales even this weekend.
All right, so you would make sales. All right, and what about 97 sales?
I think the December corn futures above $3 maybe is one of the best sales on the board. That's a little hard to believe, but with average weather next year, we could see that trade down to the 250 level, and that is maybe a sleeper trade here. Everybody's been buying that Dece and selling the July as a spread, and it's been held up here. But once we start to see attitudes deteriorate and old crop prices deteriorate further, that's going to look like a better and better sale.
All right, now you mentioned bullish soybeans. Now, are you both friendly to soy? Tom, what about you?
Again, I'm slightly friendly to soybean. I think we're going to break here into the 1st of October, then find a base, rally back up to try to entice more acres down in South America. But I'm not extremely bullish. You know, we're at 805, 810, something like that, basis November. We could rally back up in the 835 to 845 range. I don't see it going much beyond that.
Okay, what about you, Doug? Make sales on beans?
The bean situation is still kind of a powdered keg with a fuse, and we've tried to get the match to the fuse on several occasions and just haven't been able to quite do it. There's still a major question in our mind about the size of the crop. All the crop size estimates are right in the 2270 area right now. Even that could eventually leave us with a carryout no larger than 100 million. The government's already forecasting a mild price rationing situation. While we're finding excellent early prospects on corn yields, we're finding a more mixed situation on beans. So the bean thing is still very delicately balanced. If we're going to hold some commodity to speculate with in the cash markets, it would clearly be beans, and we're not excited about making sales right now. But it may be a situation where it just hovers near the $8 level until the October crop reports, and we can really nail down what kind of a crop we've really got.
Okay.
The world demand situation is going to be very strong. China's buying, they're doing to the bean market what they did to the corn market 2 years ago, moving from an exporter to an importer. So the demand base is much bigger than people think, and the market needs to have a big crop in South America. We're assuming a 10% increase down there. If you'd ever have weather problems there this winter, this thing could take off.
Okay, so we're not in that big of a rush to sell soybeans at this point. You're willing to hold on and gamble, but Tom, cotton market a little bit stronger this week. What's your feeling down there? They've
Well,
some
the
crop
USDA
problems.
came out with a strong report for the cotton crop this week, and it gave it a little pop up. Although you have to keep in mind they're still projecting the 4th largest cotton crop we've ever seen. So you had a nice little rally up. I think again you have to be a seller of cotton on a rally.
All right, Fed cattle market. Again, we've seen such a nice improvement from this spring, and we've kind of had talked about this marketing hole. Are we in it right now?
Well,
Is
yeah,
that what's happening?
we are absolutely in it. That's exactly what's driving the cattle market right now. We're in that $72 area basis, the cash cattle, and I think we're going to move up into the 73, 74. The wildest bulls think up in the upper 70s. I don't personally believe that's going to happen, but that's the range some people think we can get to. October cattle, I think, have a potential to move up into $75. December's up into $70, and I would be, if they get to that point, I'd be buying puts to protect falling apart.
All right, hog market bounced a little bit this week as far as board is concerned.
We went up. We made new contract highs in the cattle this week, and we almost did in the hogs. They're very strong. The numbers have been fairly light. The demand has just been excellent. You know, these firmer beef prices have created some pretty good demand for the pork. Exports have been very good in pork, and that's drawn the hogs much higher than I think a lot of people thought we'd go.
Okay, does this portend well for the first quarter next year?
Well, the first quarter next year is really going to be a problem for the cattle, and I think it may be for the hogs too.
Okay, you're looking for price range in between?
Yeah, I think right up against these contract highs and these kind of upper 50s area, you have to be a seller.
Very good. Tom Fitzenmeyer, Doug, thank you very much. That'll wrap up this edition of Market to Market. Join us again next week when we take a look at some important trends in rural economic development. Until then, I'm Mark Pearson. Thanks for watching and have a good week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Partial funding for this program is provided by Friends of Iowa Public Television and the Central Educational Network. Major funding is provided by this and other public television stations and by Deere & Company on behalf of John Deere Dealers.